Founders Floor, a co-working accelerator for startups.
So my name is Nick Triantos. As we mentioned, I'm a VC at a firm called Ignition Partners. Been around about 20 years now, split between Seattle and Silicon Valley, and I work down here. Our office is in Los Altos. Prior to coming on board, amongst other things, I was an angel investor alongside Jim, totally coincidentally. But I started my career as an engineer, founded a couple companies along the way. I've been at a total of 6 startups, had some good luck and some good success. And these days, I'm very focused on enterprise software companies. We tend to invest at Series A. So our typical first check will be anything between maybe about $4 and $8 million. And we've invested in companies, people have probably, Splunk is one, Docker, Cloudera, DocuSign, a bunch of companies that people have heard of over the years. And most of what we look for, we'll talk about it, I guess, when we get into the Q&A, is companies that are at the point where they're starting to be ready to go out with the customers, or they have some beginnings of revenue. Anyway, I'm very happy to be here tonight.
Thanks, Nick. Jim Connor. So I was a colleague of Nick's when he was at Sand Hill Angels, and I'm still there. And I've been through your process. I founded a company. I've had a few very difficult years, and I completely understand and sympathize at times with what you're going through. I was able to persevere through it, and got a nice exit. And then I wanted to just start playing tennis again. And then, lo and behold, you cannot resist the opportunities in the Valley. So I ended up. Now I operate 2 education companies, and then maybe it's my good luck, started being a producer, and I have a TV show now called Game Changers Silicon Valley. So you can all see it at gamechangers.tv. I have to give it that one plug. Thank you very much.
Good. Thanks, gentlemen. Wanted to maybe start off by if you guys could maybe talk about one of the investments that either you have done yourself or maybe your firm has done that is something that you're really excited about that maybe has happened somewhat recently. Nick, do you mind maybe starting us off?
Yeah, sure. So let's see. Of the ones that we've invested in, one personally that I invested in through Ignition is a firm called Tractable. What they do is solve a very uninteresting, unsexy problem that happens to be really huge for a large customer base. So what they do is they analyze auto insurance claims and the photos that people take if you bring your car into the body shop and they have to replace the bumper after an accident. Their software will analyze that bumper or that door or that trunk or whatever and try and detect whether or not the body part really should be replaced or whether it could be instead repaired, repainted, etc. Super uninteresting, super unsexy, unless you happen to realize that there's millions and millions of claims. Insurance companies pay a lot of money per claim to go and do that work already. And these guys are basically automating it with a computer vision system. So it turns out to be that alone is probably about $1 billion business. The hard part about a business like that, for those who are trying to do things in and around AI, is finding a way to get to data. And having data that can train your system is super critical. And in this case, they were able to make a partnership. And instead of going and finding the best company in the industry with whom to partner, they found one that was a couple of notches behind. And the big advantage of that was they were able to get much better negotiating leverage in that partnership. So they basically got access to this data, permission to use it more or less in whatever way they wanted without giving up terribly much. So that's a company that went from basically 0 revenue when we invested a year ago to now it's multiple millions of dollars in revenue, and they're looking at many times over growth again this coming year with several of the big insurance companies in the U.S. and Europe. I think that's a very, very interesting company to me. There's a lot of bluster around technologies like AI, and there's very few companies who are actually using those kinds of techniques to go and solve real problems that big customers actually have to pay for. So that's one that stands out for me.
So I have to think back a little bit about a company that, because angel investing is such a tough deal that a lot of companies just don't make the next horizon or they don't make the next threshold, but we have a handful of them. And one of it's relatively recent, is a company that was doing work in education. I happen to like education, and that's a very tough market. You know, you got the schools against you, you got the government against you, you got everybody against you. You're trying to innovate. Nobody wants to change, and yet students are failing. So these guys, through some consulting, and they're from New Zealand, they wrote a front end to Google Docs. Everybody knows what Google Docs is. You know, wonderful product, very difficult to organize, but great product. They wrote a front end to Google Docs that served the needs of almost any school, any district, what have you. So the challenge comes down to how are you going to sell this thing? You know, you're going to go around the sales guy and go to trade shows, and lo and behold, if they didn't get Google to pick them up as a natural partner. So it turned out they had a value proposition, excuse me, that Google said, we'll do the IT services of this entire school for free, because that's what they do, and all you do is pay this other company, our partner here, $4 a month for each student, and they're going to do all the front-end work for you, so everybody happy? And they were. So the other dynamic about that is that they not just go after school districts, they went to whole countries. They got the country of Indonesia, and they got parts of India up and running using this. And they didn't actually do that much in the U.S. because the U.S. is a little more stubborn, I guess. And they're going great guns. They actually turned down an acquisition offer that wasn't enough in it for the investors and the company. And I'm very proud of them. I think they're a great company. I was the deal lead on that within Sandhill. So
yeah.
Thanks very much.
You know, before we kind of go into some of the questions related to fundraising, I thought we'd just maybe talk about, you know, what makes for a, you know, really successful entrepreneur. You guys have, you know, been on both sides of the table, if you will, founder and investor side, but also you've seen thousands of entrepreneurs throughout your career. What are some of those kind of key characteristics that you kind of see time and time again that really helps them to, that floats up to the top where you say, you know, these are just some characteristics that make for a successful founder. I can kind of name them type thing.
You know, this is a $64,000 question because I think everybody's saying, well, that's me, right? The reality is you have to know yourself. You know, you have to know what you're good at and what you're not good at. And that's a really important thing. Everybody says, oh, you got to be smart. Yes, you got to have domain knowledge. Yes, you got to have leadership skills. But, you know, you got to know yourself, first of all. And if you are able to know yourself and reach out and show people to be more successful joining you, not working for you, but joining you, and they understand that, and they'll be more successful joining you than they will be going at it on their own and, you know, working for another company. You maybe will get some leadership out of that. You know, you do have to be technically strong, but you got to know what you're good at, and you have to recognize what you're not good at. And when you're doing everything in a small company, you know, you don't know what you're good at. You know what you hate, and you know what you like, but the stuff you hate is the stuff you got to be good at, and that's a challenge. So I think it's a lot of other things, which and Nick can go into also, you know, the perseverance and all this, but the work you do has got to be fun. I just say that. You must enjoy the work you do. That's about it right there.
Yeah, I mean, I guess the only things I'll add to that, for those who are new to being a founder, it is generally a really lousy job. You know, the truth is that most of the time things don't go perfectly well. You know, even if you are named Larry or Sergey or, you know, Mark or Steve or whoever, Ilan, a lot of the time, the vast majority of the time, you're dealing with crises, you're dealing with things that don't work out the way that you had initially planned. And so just being able to sort of deal with that and adapt to it is really critical. And then Jim, I think, touched on it to an extent, that being an exceptional cheerleader or recruiter for whatever your vision is matters a tremendous amount. You're spending almost all of your time. The one common thing that a founder really has to do is be able to pitch their vision for what it is that they see in the world and why it is that their company should exist. And either you're pitching it to investors, you're pitching it to customers, you're pitching it to people you want to bring on board at your company who today have a lot of options. They can go work for, you know, a ton of other companies here in the Valley. The unemployment rate here is minuscule right now. I'd say that most days, so I've been a founder at 2 companies, and one I was CEO. I've been a CEO at another company as well. I'd say if you just count up the number of days that were good and the number of days that were bad, it greatly outnumbered the bad days greatly outnumber the good days, and that's the reality. But when it's good, it's really good. It can be great. It can feel incredibly rewarding when a big bank calls you and says, we've decided to buy your product, or when your product gets back data from a clinical trial that you ran and all of a sudden it looks like your technology is going to work. and I will say, I've heard a lot of times people used to tell me, don't give up. Sometimes it's not the right answer. Sometimes the right answer is you actually should not give up, but find something different to do with your passion, because the thing that you're working on just isn't working out. If you keep banging your head against the wall, eventually you have to look and see, is this because I'm doing something wrong, or because the market just doesn't see it yet? Maybe you're that person who figured out everyone needed a smartphone in their pocket, but it was 2003 and it was a little bit too early for you. And maybe there's the kind of thing where you can build enough technology, and by 2007, when Steve Jobs is showing people the iPhone, all of a sudden you've got a platform for whatever thing it is that you do that could be valuable. Looking back at some of those kinds of changes that have happened in the world over the past maybe 5 or 8 years, there's been a lot of blockchain people, for example, who in 2010, 11, 12, or 11, 12, I guess, were talking about blockchain, and most of us didn't know what the heck they were talking about, and now they're all probably billionaires. So, and I wish them all the best.
Yeah. And there's a lot of highs, a lot of lows, high highs, low lows. The reality is that what you read in the media, there's never an overnight success. There's always something to the backstory to that, and there was a lot of having to soul search and dig deep at the very early stages. So you can see that with everyone that you would think to be a success now. So, talking about the fundraising process a little bit, for companies that are fundraising now that will be in the future, kind of starting just from the start, what's the best way to reach out to investors? How to reach out to them? Is it direct email? Is it events like this? What do you guys see to be the most effective way to help these individuals be efficient with their time and know what to do?
Yeah, I mean, I'll just mention, for me at least, sending me a random LinkedIn, I just don't see them because I get enough of them that I honestly filter them out and I just don't read them. So that's probably not the right answer, nor would be sending me a unsolicited email. Sometimes I do read those, but honestly, they're just the likelihood of me being able to read it in enough depth to really understand the subtleties of what it is you're trying to do are pretty low likelihood. So you got to do these kinds of events. You got to come out and meet people and sort of press the flesh a little bit. I hate that term, but that's kind of what you have to do, is just get to meet people and talk to them and hear feedback and read their facial cues and see, why is it I'm making so much eye contact with you? It's because you have a really lovely jacket, by the way, sir. But anyway, I'm totally kidding. It's a nice jacket, though. But the thing that matters is, is this person really engaged in the conversation? Is this something they care about? The other thing is, know who that person is who you're talking to. If you're going to some event because specifically, for example, there was the event you mentioned where someone from Emergence will be here. Great if you guys want to come back and try and pitch the person from Emergence. You should just be aware of what kind of things does Emergence invest in. If you're doing some kind of drug development thing, honestly, he probably just knows nothing about it. There's zero chance of it being of value to you nor him to try and pitch him. But if you're doing something in enterprise software and you kind of fit within the other criteria of what that firm looks for, which is almost exactly what our firm looks for, great. Then I'm sure they're going to be very, very happy to have that conversation with you. So.
Oh, great points. Well, I'm going to give a slightly different approach to this because it needs to be different. I'm going to say that you are essentially in the business of selling something, yourself, your product, your business. And when you go to see a customer, when I would go see a customer, when I used to sell software, $50,000, and that was 20 years ago, it was a lot more money then, initial license, I knew a lot about the customer. I knew a whole lot. I knew their budget, I knew where they spent, I knew how they made decisions to the extent that I could get it. Today, all this information about investors is completely public. So, you could look up Nick in LinkedIn, you could look him up in any kind of search, Google, and you can find out what school he went to, what sports he plays, where he lives, more or less, what his investments are. You can go to AngelList, you can find us, and so ahead of time if you're wasting his time with your story, because you're wasting your time if it's not going to hit him right. Maybe he would refer you to somebody else, but that's another story there. And if you're looking at me, find out what my interests are now. To make the connection, just come up and talk about something of our common interests. I'll ask you, what do you do? And you'll tell me. And if you know that where my experience is, you'll know that I'm going to have a connection to that. I'm going to talk about. I'm going to be willing to listen. And a lot of times people come up and they tell me something about life science. I know nothing about life science. So they'll talk to me about this latest, greatest thing that's going on in the capillaries of blood. And I'm immediately gone. I'm immediately thinking, when can I get to my email, that kind of stuff. So do some research. I'll make this short. don't waste your time with people. Greet people, be nice, but realize you're going to bore them if you come up with a completely irrelevant story to them and it doesn't help your cause any. So, okay.
I just want to add one quick point. Because I literally, I don't remember what event I was at, but I was at some event in Las Vegas, and someone walked in the elevator while I was in the elevator going to my room, and they ended up literally giving me the elevator pitch while we're in the elevator, which is, I think, why they call it that thing. And what really matters is get that one sentence thing about what it is you do that matters most. And maybe the one thing is, we built a platform for XYZ thing that has 38 million active users. Okay, immediately my eyes will light up. I don't even know what the thing is you just said you did, but 38 million is a large number, and I would pay a lot of attention to that. Or, we build cryptography software used in the banking industry in Kamchatka. Well, I don't really invest in Kamchatka, and I can immediately know, like, this is not something for me. The thing that matters is figuring out really quickly how to get to your point. And for me personally, at least, I would prefer people not say, oh, I'm Yelp for blockchain, or I'm Google for, like, just give me something a little bit more substantial, but you got to figure out how to get that super succinct description of what it is that you're trying to do or what it is you have done that will grab someone's attention very, very quickly. As Jim said, otherwise, they're sort of thinking about when can they get back to their email.
And understanding the investor's side of the fence here, the reality is that on a Series A side and beyond, they're making 10, 12 investments a year. That's it, On the other side, if it's on a seed or pre-seed or angel, then maybe 25, 30 max. So, I mean, they have to see, and they're only investing 1% of all the pitch decks that they, see in the meetings they take. So, I mean, they have to see a lot of companies throughout the year. And so they just don't have time to sit with the ones that, they just know are not a good fit. So, not wasting everybody's time is super important. So doing your homework on those individuals helps everybody, grease the wheels a little bit through the whole process. So, I'm talking about the fundraising process, just so the folks here who are starting that fundraising process understands kind of what they're getting into and what they need to think about. Maybe some advice on this, like, just the basics, like how much time they need to allocate in their minds for the whole fundraising process from the time you start to the time that money is wired in the bank account. Or maybe, also, advice on, how many individual investors you're going to need to pitch. A lot of people have a misunderstanding that you can count them on your hands. And I think there's a different reality to that.
So, Matt, I'll answer that initial question by asking you, how many girls do you have to date until you get a girlfriend? That's basically the same answer.
Yeah.
It depends. How lucky did you get? Who did you meet? How much effort you put into it? There's no single one answer. But I do think, I'll give you one point, that you're going to ask for a pre-money valuation, right? You're all going to, the investor at some point are going to say, well, what is your company worth? Whether it's a note with a cap or an actual pre-money and an equity round. And so you need to really, in my opinion, one of the most important things you can do is think about how you justify that value. A lot of people come in to give me a pitch and they talk, and this is great, great. What's your valuation, your pre-money? They're thinking, what can I get out here that this guy won't barf, And that's, to me, one of the most important things that you need to get set in your mind, and there's a lot of ways to do it. And you don't, in today's market, especially for the angels, not for the venture crowd so much in venture firm, but a lot of companies are just way beyond what an angel group will do. An angel group will invest roughly at a pre-money valuation, probably as low as 2 and as high as about 8. But if you're going to go at 8, you've got to have customers, you've got to have revenues, you've got to have traction, you've got a lot of things. And the mid spot is really $4 million as a pre-money, assuming you got a product that's demonstratable, references, all that good stuff. So if you come in and you start talking about a number that's just too distant and doesn't make sense, and you think you're making a good story, waving your arms, I can guarantee you you're not. So be succinct, have credibility behind it, use some metrics if you need to. Those are the most important things, and then you'll get traction.
Yeah, maybe the only thing I'll add, with my last startup, which it grew pretty nicely, and I was able to get a very good outcome for the company. When I was raising our Series A, my spreadsheet that tracked all the different VCs who I had reached out to, there were 175 no's on the spreadsheet, just to get back to that point. And this was a company that we had JP Morgan as a very large customer. They were about to do a multi-million-dollar deal with us. We had Wells Fargo as a customer, Deutsche Bank, Deutsche Telekom. I mean, these were very, very real customers. And, and the company, as I said, had a really great exit ultimately. A lot of no's. And part of that is just because the matchmaking process is difficult. And so you should be prepared. The question about how much time does it take? I mean, from the point when I was at Sand Hill Angels, at least, from the point at which we met the company and decided, okay, yeah, these guys are, or gals are credible and interesting, it could be maybe anything minimum 4 weeks, maximum maybe 10 weeks until we actually would wire the money. But the process of actually finding, are you the right fit with Sand Hill Angels or with any other group, and are they the right fit for you and so forth, that can take months. And, and that's a bummer because that's time that you want to be able to spend building your business, hiring people, finding your customers. But, it is a real investment of energy in part because you're asking Jim to take money out of his wallet and write it directly to you, or for me to take it out of the wallets of my limited partners, of my investors, and write it into your company. And so it's a big commit both ways. And the other piece I think that would matter, by the way, that in the beginning I didn't really appreciate maybe how important it is it's not just about you convincing them to write the check. It's also about you figuring out, are these people who I want to be in business with? Because that's ultimately what you're doing. And figuring out, are they the type of people who I think can add value? Are they the type of people who, if things go sideways, I'm not going to get hung out to dry? So it's an interview process that has to work in both directions. So don't just go in thinking Nick has access to a $200 million fund, therefore I need to go be nice to Nick. Maybe I'm a total ass and you want nothing to do with me. And, or maybe it's just simply my experience is totally inappropriate for the kind of things that you need. But when you take my money, you're not just taking money from me. And same is true with angels. These are people who are becoming a part of your company in some way, shape, or form. And you just think of it very much, again, the metaphor of being married. These are people that you really have to figure out that you want to commit to some number of years of your life being invested with them.
Final question before we start the pitch event. But in regards to companies that are going to be pitching tonight, maybe a little advice for them on, we talked about the types of pitches you have. You have the elevator pitch. The goal is to get a sit-down meeting where you have maybe a full 45 minutes, potentially with the attention of the investors, with maybe some of their partners in there. But in order to get to that, you have these different types of pitches that you have to have. For the folks that are here for this 5-minute pitch, it's a very common type of pitch to have. What are some of the key elements that they need to have in this to be able to help get that sit-down meeting with you folks and other investors like yourself?
I mean, I'll just say, lead with something really impactful, because especially when there's a group of people pitching, I've been to some of these events where there's 20 different groups who are pitching in one night. By company number 13, they're all a little bit of a blur. But if there was one of them who said to me, again, that 38 million users or whatever, we invented a new kind of physics. If there's something really clever that you've come up with that you think really is impactful on the business, not, oh, I wrote this line of C++ code that's really interesting, or, that stuff doesn't matter. But the high level thing that's really going to stand out, I would say lead with that. And then, hi, my name is Nick. I work at a company that's building perfect security for the purpose of XYZ thing. And we have customers in banking today that are, potential $43 million of opportunity for us. Now I can go spend the rest of the 4 minutes and 45 seconds that remain telling you more detail, but like right up front, you heard enough that you could say, all right, yeah, that could potentially be interesting. I better tune in here and not think about getting back to my email. So.
And I'll add one perspective to that, and it's my own personal bias. I like a story, and a lot of people will say this, but what happens, as Nick alluded to, when you've had 10, 12, 14 pitches, you can't remember any of them except the one that hit you right. And I have found that among my colleagues, friends, and fellow investors, the ones that stick out are the stories, the ones that are constructed around a story that have a logical situation, problem, resolution. Really simple stuff. Situation, I'm not going to pick anything, but situation, what we found out about it, what research we did, how much did we go and determine this is a viable market before we committed the next 2 years of our lives to develop something? How careful, or do we just not have anything else to do, so we said, hey, let's join this accelerator and come up with some idea and we'll just put it together and go pitch people. That story is so important, and you can't practice the story enough. The more you get in front of a mirror, turn on your cell phone, practice that story, watch yourself, do it to everybody who will laugh at you, because if they'll laugh at you, at least you're getting honest feedback. you'll find ways to work around it. That's my most important thing. Go ahead.
Yeah, just one small point. Actually, I think you and I, Jim, are both investors in one company that's been doing pretty well lately. And that one in particular, so this was one from a million years ago. We invested in this thing together. And it's not a tech company. The things I invested in as an angel were tech and a couple of things in life sciences that had particular interest to me. And this was one where two founders came in and they told us a story. And the story was about why it was that they formed this company. It was because the thing that they were trying to do was such a pain in the rear end before the existence of their company and so on. And that absolutely was very, very impactful with me. And it turns out that's probably the best investment I will do in my entire life. And it really, because the reason why they've been able to persevere for that, we did that 2006, I think? 2006, so it's been, 12 years now for these guys. The reason why they were able to persevere for so long through so many ups and downs was because it really had a very personal need for them to go do it. It wasn't simply because they said, well, I bet I could probably make a bunch of money building something that does this. And so I totally agree that that's a super important thing. If you have that story, if there's a reason why, your mom died of XYZ and that's why you're going to spend your life trying to go find a cure for XYZ, that's, you don't want to spend 43 minutes about what a great mom she was and so forth, but, just this has been very personal in my life because XYZ, that's perfect. Or I was an accountant and I worked with this really horrible software and realized, my God, I could make much better version of that software. Great, now I understand, at least you really do understand that space because you were an accountant for a bunch of years. Anything like that is really, really helpful as context.